right, I'm going to do a quick recap of today's trades. The reason being is I did live stream all of this on YouTube, but my mic was muted, so there is no audio. So I'll just do a quick recap of how today went. Initially, before market open, I thought we were going to push to the downside, maybe grab a little bit of liquidity before pushing higher. I had a target up here around 230 because Asia session high was 230. So 230 to this 235, they both would have likely been ran. That's ideally the level that I was initially targeting. However, I was anticipating a slight pullback before market open, before it pushed higher. And so you'll see I just got chopped up right here. Took very, very small losses. Most of them were actually break even. Just waiting for this move here. So I sold into it, bought one back for it's like 6 points, 6 points in the profit. One got stopped out at break even. Bought and sold in here, lost. I think by the time I actually caught the runner to the downside, I was down $400 or something like that. So it wasn't anything major, but still a little chunk of money. I was just anticipating the move down. I was anticipating this move down and then a quick move straight up to buy side liquidity. But anyway, it pulled down. Whenever I seen that we pulled back up here, I was buying, I was selling, I was thinking, okay, we pulled back significantly further than what I anticipated. So I zoomed way out and I was looking at the 4-hour chart. I probably don't even have it on here. I'll just go to the 1 hour, but I zoomed out. I was looking at the 4-hour chart and I said, okay, well, maybe we have a larger objective to the downside that we want to target. And so on the 4-hour chart, there is actually a 4-hour fair value gap over here. So with the 4-hour imbalance, I was thinking, okay, maybe we'll target lower, significantly lower. We're going to fill the entire 4-hour imbalance. Now, we touched into, and you won't be able to see it because we're still in that same candle here, or just created a new one, I guess. We touched into this imbalance on this new candle, and then it started to pull back. And I was anticipating that maybe I was going to get stopped out at break even because I shorted into this numerous times, stopped out at break even. But we did end up coming all the way down and filling this entire imbalance. So, trade-wise, as the market started to sell off and I seen it turn back over, I was taking it short in here. Typically, I trade on the 15-second chart. I have 4 screens here, so I'm usually monitoring ES and NQ on one of my screens. So I seen that we had an SMT at the highs, and with an SMT, that's initially at the beginning. That's when I was anticipating that pullback, and we pulled back and balanced this initial move. I was just anticipating a slight minor pullback, right? So I'll show you. This is how I initially seen this playing out. A pullback from up here. Since I seen the market turn, right, because I was trying to take it up to 230, and then I seen the market start to turn, so I was anticipating a pullback, balanced the market. To me, the SMT on the smaller time frame is filled. But whenever I zoomed out and I looked at the larger time frame, the 1-hour chart, there was also an SMT. So with us having a larger time frame coming into play with generally the same idea, we can anticipate an even greater move, right? So we balanced this range here on the 1 minute, pushed up, grabbed this little liquidity that we generated right here, right at market open, and then we sold off. So whenever I zoomed out and I looked at the 1 hour, I was thinking, okay, we balanced this, a small time frame range, but on the large time frame, where's our move? What is our move that we're potentially looking to balance? And so this was where I ran my Fibonacci, only because this was the the leg, right? The low of this initial leg that broke the highs over here and really created this move up. So with this being the low, this is where I drew the starting point of the Fibonacci. This was the whole move here, right? So we actually came back much further than 50%, but 50% was a solid initial target. And as you can see, once we broke 50%, I actually went short again back in this down to a much lower level. Okay, so whenever you're trading Fibonacci's, there's something when there's a pullback, there's something that it's been called many things in the past. I call it a golden pocket, and it is just kind of like that sweet spot in the Fibonacci. If you're looking just simply for a retracement and then a continuation, this is just the sweet spot within that Fibonacci where we oftentimes find good entry points. And so here, you can see that we pulled down clean, pretty clean down into the golden pocket, which the golden pocket ideally, let's see here, ideally would look something like this. It probably would have been roughly this size. I use TradingView to chart. I trade on Tradeovate, so I have all of the proper Fibonacci levels set on TradingView. That's what I use. I don't do a whole lot of extensive charting on Tradeovate. But ideally, this would have been about the size of the golden pocket. And as you can see, the market had pulled back very clean into it, respected the golden pocket straight out. So that's something that you guys can look into. You can YouTube that strategy if you want, golden pocket, on Fibonacci. And there will be a lot of videos about it just for further explanation. So we'll go ahead and zoom back in here. As this market started to sell off further than that initial balanced point that I was looking at, I started to see the opportunity to sell, right? I seen the opportunity, okay, maybe we'll have a larger continuation down to 50% golden pocket, somewhere much further down. There was a 1 hour fair value gap, 4 hour imbalance, all of that was sitting down there. So great opportunity for an area to anticipate the market to pull down to. So we shorted it in here. We were stopped out at break even a few times. We were stopped out for a small loss. Like I said, overall I was down like $400 or somewhere around there. We were anticipating this move, right? So as we broke previous candle lows and previous candle highs, I'm looking for that opportunity. Okay, quick liquidity grab, right? This candle likely pulled back, or this candle pulled back, and once it flipped bearish, I entered short and then was stopped out here. So there was opportunity to short here, and if I would have widened my stops, I certainly could have. Although the way I view it is I would rather take a trade, take multiple small losses anticipating that greater move, than take a short in this situation, have a 40-point stop, right? If I have a 40-point stop and then I get stopped out, now I'm down a significantly larger amount, because if I have like a tight 6-8 point stop, 12-point stop, something like that, if I get stopped out, then it allows me to think a little more clear, not emotionally. I'm not in a trade. I don't have to sit there and try to micromanage the trade. I can sit here and look at price action. Okay, are we going to continue higher? Are we going to go ahead and flush? So ideally, I'm perfectly fine with taking a few small losses right in the beginning, trying to catch that big move. Now, you can trade however you want. That's just how I trade, and it tends to work out quite well for me. So if I take an 8-point loss, and then I take a 2-point profit because stopped out at break even, I never put it directly at break even, try to justify for slippage and fees. So I usually put it a few points, at least 1, typically 2 points in the profit. So if I get stopped out at break even again, then I enter another trade, get stopped out at break even again, enter another trade, stopped out at 8-point loss again. That's fine. right? Like 2 8-point losses, 2 2-point winners, right? I'm down 12 points. It's nothing major. Because the reason why it's not major is because once the market started to flip, and you can watch the live stream. If I'm not mistaken, I said once we break this low, I'll be looking to go short. But the market ended up pushing so quick, I didn't even get the opportunity to put the sell limit below this low. And so as it started to sell off, I just entered. So, missed out on seven-ish points or so, but that's perfectly fine. We sold down. Looks like I had bought here, re-shorted back into this candle, stopped out right near break even, right? Few points in the profit. Because like I was saying, I keep my stops tight. I'm perfectly content with that. I would rather keep my stops incredibly tight, risk the smallest amount, because when the market does flush, you can catch these moves. So, once we started to push on this candle here, likely whenever it broke this low, I went ahead and went short again. I don't remember specifically, but that's the way it appears here. So the market then sold off very, very aggressively. I was very, very deep in the profit there. Actually, my entry was around 143, and that's over 100 points just here. Slight pullback. I'm not sure if maybe I added to my position, stopped one out at break even, something to that nature. Anyway, as you can see, I just continued to short this on the way down. Short. Probably sold one here, and then last one got taken out right here at 21,968. Get the damn payout. That's why you're trading prop firms anyways. You want the payout. You want the payout. You want to get to live funded. If you don't want to get to live funded and you want to keep trading evals, that's completely up to you. I've always wanted to get the payout, and then whatever happens, if I get another payout or I get pushed to live, I'm content with that. But get the initial payout. There's so many of you that have never gotten a single payout. And so push yourself to be more disciplined, be more consistent with your trading, maybe downsize so that you're less emotional when trading. You can find that strategy and that rhythm within your trading and get the damn payout. There's a saying, I've heard other YouTubers say it, pay the trader. It's so true. We're not doing this for fun. Who enjoys this? Like, I love sitting behind the charts, but I don't want to be here all day. Come here, make your money, pay the trader, walk the fuck away. All right? Today, we traded. We took a little bit of money out of Wall Street's pocket. We're content with it, and we're moving on.